Good afternoon, good morning, good evening to those of us joining from different time zones. My name is Guillermo. I am a manager at MicroSafe Consulting. You are here gathered for our webinar on innovations in digital public financial management. A couple of quick housekeeping notes before we formally commence with the webinar. The webinar will first start with opening remarks, followed by which we will have four presentations covering different aspects of reform in digital public financial management. The first half of our speakers will be speaking to reforms that have been taking place on the expenditure or spending side, showing how technology is being harnessed to improve social protection and other essential services. After these first two presentations, we will then have another two exciting presentations going to the other half of public financial management, speaking to reforms that are taking place through the use of technology on revenue and tax administrations. With that, I am excited to introduce Mr. Mitul Taplial, who is a managing partner at MicroSafe Consulting, to provide the opening remarks for this webinar. Mitul works with governments, philanthropies, multilateral institutions, and a range of other organizations to design, optimize, and implement public policies and programs across Asia and Africa. Most of his work has been at the intersection of policy, technology, and society, covering diverse areas like digital governance, public finance, social protection, and climate. Mitul, thank you so much for kicking off our session. Over to you to formally start our webinar.
Thank you, Guillermo, and welcome everyone again to this very exciting session. So I think all of you would agree we are in the middle of a digital revolution. And this digital revolution is empowering citizens in many ways. So often we hear and read about citizens demanding their rights from the governments and more specifically from the elected representatives. So they're holding them accountable for policies, for free speech, for tax rates, for spending, and for outcomes on the ground. Earlier, elections were the only time when citizens could assert their needs. But now this digital revolution is allowing a very regular engagement. And now in turn, elected representatives are also responding to the citizens. And they're demanding more and more from bureaucracy. But more often than not, governments and the bureaucracy is falling short in delivery. And we often hear reasons such as weak state capacity, low tax revenues, and inefficiency in spending, among many others. Now, these problems are huge if you look at the numbers. So, particularly on the low tax recovery. So in developing countries, the tax to GDP ratio, which is one of the important metric to measure how well economy is doing in terms of taxing its resources, it's in the range of 5 to 20% for the developing world. And compare it with the OECD average of 34%. And in some of the high welfare nations, it is as high as 45%. So if governments have to provide for the citizens, if they have to show improve outcomes on ground for critical things, they have to raise the taxation. But it's a hard thing. Of course, it's a combination of right set of policies, right set of infrastructure, right set of capacity within the departments, and of course technology to do that. Similarly, there are challenges on the expenditure side as well. So again, data shows that in developing countries, the idle money ranging from 4 to 30% of the budget is parked in the bank accounts. Now, it's not the lack of budgeting or lack of intent. When the politicians are demanding services, they are also allocating resources. But those resources are getting transferred to the implementing agency, and in most cases, implementing agents are not able to spend them on time. And as a result, this money lies as float in various bank accounts. And imagine if we take an average of this 4 to 30%, we're talking about 15 to 20% of a government's resources lying in bank accounts idle. Now, this is ironical for middle income, low income countries. because government is not able to meet their expenditure commitments and they borrow additional funds. And as a result, they have to pay interest on this borrowed capital. And it also leads to other macro effects. For example, there is a lower credit availability because the government is borrowing from the banks, and eventually it leads to slower economic growth. Now, the good news is that by combining public finance principles with some digital principles and some very basic efficiency improvement principles, we can address some of these challenges, particularly around low taxation and inefficient spending. And I'll talk about just a few core principles. For example, a very simple principle of single source of truth. So what it means is if we have registry of, say, taxpayers, which is trusted registry of taxpayers, then we can at least identify who are the people we should be taxing. If we have a registry of, say, houses, then the municipal taxes can be improved. Similarly, on the expenditure side, if we have a digital registry of all the projects, all the assets, the spending efficiency can improve. And for all this, we need observable systems because we need to have very clear visibility into what is happening where. And this would need technology, investment in technology. Now, other core principle could be just-in-time strategy, which is borrowed from the very famous just-in-time strategy of Japanese. Now, imagine a scenario where tax collection happens as and when it is due. So money is collected instantly and transferred to the treasury. Now, this would need a fully observable system. Now, also imagine a scenario where the tax is collected instantly at source, but it's not remitted to the treasury, and there is no way for anyone to observe that system. It will lead to much worse outcomes. So, similarly, on the expenditure side, the money should leave the treasury only and when it is due. It shouldn't be parked in intermediary bank accounts. And then there could be some other principles around reducing discretion of officials by relying more on rule-based decision making, straight through processing, and so on. Now, all these things might look like very theoretical principles. But now the good news is some of these have been applied and there is an evidence that these principles work. And the evidence is from India, where we have very encouraging results from some of the departments. For example, in one of the departments within the government of India, implementing these principles supported by robust digital systems, one department is able to save $375 million every year just in interest costs. I'm not talking about the efficiency gains, etc. Similarly, in one of the state governments in India, the government is able to reduce idle parking of money in bank accounts to zero. And this used to be 15 to 20% in the initial system. Similarly, and as a result of this, there is 60% reduction in payment delays to vendors and beneficiaries, and that's why they are able to function better. And there is also reduction in the manual work of the officials, thereby reducing the administrative burden of these officials. Now, I'm very excited that some of these principles are now being applied by the Nigeria Governors Forum in Nigeria to increase tax revenues and also to improve public spending. And I'm sure we'll hear more about it from the speakers in the later part of the webinar. So just to summarize, so PFM should not be viewed in isolation. It should not be viewed solely through the lens of resource mobilization, budgeting, and expenditure. There is immense potential in PFM to be used as a forcing function to improve state capacity, to improve outcomes for the citizens on the ground. And this can be done by combining digital principles and PFM principles and investing in digital infrastructure. So with this, I'll hand it back to Guillermo, and I'll look forward to the discussions from other experts.
Thank you so much, Mithul. I think your opening remarks did a fantastic job of unpacking what exactly is at stake in the present with inefficient fund flows and other challenges with both on the revenue side and the expenditure side. and highlighting the great opportunities that are currently available in India, in Nigeria, around the world in order to implement technology to address some of these fundamental and systemic challenges. I'm very excited to now introduce our first speaker, Mr. Alok Rajan, who will walk us through the work that the Gates Foundation has precisely been doing on this area, particularly on the expenditure side. Alok is a senior program officer at the Gates Foundation with more than 10 years of experience in public service delivery reform, specifically in the service delivery interface between governments, citizens, and businesses. In his current role, he leads the work on state capacity, working on issues of public sector performance management, administrative data quality, and public financial management. Alok, thank you so much for joining us. Over to you.
Thank you very much, Guillermo. I lead the work on state capacity and public finance at the Gates Foundation in India. And I just want to quickly set out some of the work that we do and the thinking behind that. I think Mithul, towards the end of his presentation, made a very important point that public finance cannot be looked at in isolation. It is one part of what we call state capacity of the government to deliver. So within the foundation, I think we focus on that whole range under this portfolio. We call it people, process, finance. But essentially, this portfolio works on strengthening core departmental functions such as PFM, procurement, payments, data systems, data quality, performance management, etc., which collectively we know as state capacity to deliver. And the foundation essentially cares about this because we have sectoral goals, and the achievement of those sectoral goals in health, agriculture, gender, sanitation, etc., is reliant on the capacity of the state to deliver. What I do, coming back to PFM, is paint a picture of the sort of problem statement we often encounter at a department level, and then tell you a little bit about how some of our grantees are working on solving some of these issues. So just to set some broad context, typically you will have a situation where multiple funders, the government being the primary funder, will put money into government systems across sectors like health, education, etc., which in turn, this funding gets used to fund employees, frontline workers who then work in service of citizens. So you can imagine, funding flows across this entire chain, and in the other direction, there's a flow of information that moves in the opposite direction. Very often, I think the challenge that the government faces, and in government, it is articulated as connecting the physical and the financial. Right? There is physical movements or movement of goods and services, etc., and there is finance that sort of flows in the other end, and that information flow happens on both sides. But really, the challenge is due to the vast number of stakeholders in government and the interactions they have. There is an overall lack of visibility in information, and that essentially leads to a very high cost of coordination. The interaction channels between these various stakeholders essentially start looking like a maze. And this can lead to a host of different problems for various stakeholders in the system. For example, funders who put money into the system don't have information on what outcomes that funding is leading to, because you're not able to build that chain from inputs to outcomes. For the department itself, you don't have timely information available on revenue or expenditure, so you're not able to forecast or build estimates or make appropriate allocative or policy decisions. There is a high burden on public officials themselves who spend a lot of energy in building up the documentation on linkages between the physical and the financial, as they call it. And finally, for stakeholders within government, like frontline workers, they don't get paid on time, or beneficiaries face service quality issues due to delay in payments. So you end up with financial information that is not timely or credible, and planning and forecasting that is challenging. And essentially, budget execution and expenditure management becomes difficult. Payments are delayed. It's not a pretty picture. This reduces the whole exercise of the whole PFM cycle to a resource allocation exercise rather than a useful policy tool to drive action. But again, taking a cue from what Mithul said, if we were to build up a more comprehensive set of programming around these issues, it will require solving for administrative data quality in the first place, so that we have trusted information that then helps us link programmatic events to financial flows. Again, the financial and the physical. So in terms of the work that some of our grantees have been doing, I'll talk about three broad interventions. First is data standards in government, essentially enabling the unitary capture of data at source, over time improving the quality of administrative data. The second is just-in-time funding that Mitul alluded to. This moves the system from a push-based to a pull-based flow of funds within government. And the third sort of is smart payments, which connects to how funds flow outside of government. These are rule-based algorithmic payments that can streamline the flow of funds to final beneficiaries, which are individuals or businesses in terms of procurement. What you will see here is that solving a PFM problem is not a technical finance problem, but it requires working on fixing underlying data systems and accountability mechanisms so that information can flow more freely, unlocking the free movement of funds in the other direction. Just, quick examples before I end. On the data standards part, iFix, which has been developed by EGA Foundation, one of our grantees, is a good example of a data standard. It's essentially a coordination and visibility layer that sits on top of existing financial management systems and departmental workflow systems that can enable seamless sharing of data with a clear chain of custody. Essentially, these are it converts data into data packets that are, easily readable on both sides. This trusted data can then significantly ease some of the friction that PFM systems face and improve fund flows over time. This has been implemented in Punjab and Orissa. In Punjab, led to better visibility on the revenue side for water projects. And in Orissa, it brought in more visibility on ULB budgets and aided faster payments is the same example that Mitul talked about. Second, I think intervention is just-in-time funding, which itself now is a fairly well socialized, at least a 10-year-old concept within government. And this has been tested by the central government and it continues to innovate on it. But essentially, it moves the fund flow from the current push-based system to a pull-based system, thereby solving the problem of visibility of funds and timeliness of transfers. As Mitul said, money doesn't need to leave the treasury till it is due. This has also been, implemented at the state level. Mitul gave the example of at the city level, unspent balances going down to zero with the implementation of just-in-time funding. The third intervention is smart payments itself, which is algorithmic payments that are triggered by the fulfillment of conditions to pay. So if administrative data is clear, you have better confidence that conditions to pay have been fulfilled. And then slowly you can start to streamline the approval process or even, hopefully in the future, even do away with, post facto approval of payments. So I think in conclusion, digital pathway, especially DPI, can really play a big role in closing the gap in this chain between a particular programmatic activity happening, the associated expenditure happening, and then the accounting and the audit, the information for that accounting and audit required being generated, especially through open architecture and the use of artifacts like registries, data standards, and configurable workflows. I'll maybe stop here and hand back to you, Guillermo.
Thank you very much, Alok, for your insightful comments. I believe that your remarks, I think, very strongly illustrate about how maybe conventionally, usually when it comes to public finance and delivering programs, we think of spending as a fairly simple or one-to-one process. But I think what you've been able to draw out very clearly is how there are various systems and platforms interlinked in the process of delivering services and how each of these need to be in sync in order for a payment to finally go out to the ultimate beneficiary. And I'm now very excited to learn from the experiences of an individual and organization that has been putting these ideas and concepts to work applied on the ground. We will now hear from Mr. Puneet Joshi, who is the Chief Technology Officer at OpenG2P. He has over 30 years of experience working with product and technology startups, specializing in digital signal processing, speech processing, and machine learning. Recently, he has been focusing on creating a digital public goods to create positive societal impact, joining the MOSIP project and currently leading OpenG2P. Puneet, over to you. Thank you.
Thank you. Thank you. I'm thankful to MSC Microsafe for inviting me for this very relevant webinar, and hello to everyone. I will just share my screen, have a presentation. Yeah, I hope you can see my screen. The topic of given to me is enhancing social protection programs through digital technology. Rather than speaking in general terms, what I will do is I'll talk about digital technologies for social protection using my own project, which is OpenG2P, as an example. Just a brief on this project. OpenG2P is an open source platform for government to person service delivery. I mean, specifically, we are talking about benefit transfers. The benefits could be cash or in kind and so on. It's an open source platform. It's a not-for-profit project housed in an educational institute, which is called Triple ITB in Bangalore. And OpenG2P as a project is recognized as a digital public good by the DPG Alliance. So with this background of the project, let's look at a very typical benefit delivery chain, as we call it. These are set of processes which are fairly common across governments and countries when it comes to delivering benefits, social benefits. The typical process is about intake and registration of potential beneficiaries. You would do an ID authentication using national ID or any other ID. There would be a deduplication based on ID. Then determining eligibility as to who are eligible for the particular benefit or a program, enrolling them into a program, and then notifying the beneficiaries at various stages of their enrollment and so on, deciding on the entitlement, which is like how much wheat or rice or cash that needs to be given to the beneficiary, and then ending with a disbursement of actually disbursing the cash or in kind, and of course some kind of a reconciliation and a reporting. This is a very typical chain. Now, governments across the world are digitizing these processes. I mean, we still find manual processes being used, but it's obvious that digitization has to be done. And so digitization is happening. However, there are issues and challenges the way software systems are coming up. One of them is the systems are developed in silos. So, they don't talk to each other. There is no interoperability. There is no modularization, or they are proprietary systems which the governments have no control on. So there is a vendor locking scenario. They are not really designed as an infrastructure. So when it comes to innovation in digital systems, normally when we talk about innovations, we think today of AI and blockchain and all these things. However, there's an innovation possible in a different way, and that is like architectural innovation. You can design software in a way or architect it in a way such that it becomes an infrastructure component. And I'm going to talk about an innovation in this direction, which is the architectural and design innovation, which we call as something called as infrastructure way of thinking in doing your software. So how, this is an example of how OpenG2P does it, but, there are several ways of doing this. What we call as a DPI approach, which is a digital, public infrastructure approach of doing things, where the software is designed as it's modular, and each component is reusable infrastructure. That means you design it such that those components can be used by several departments or within your same department and so on, avoiding the need to duplicate them or do the software systems again and again. So here, for example, on the left side, you see the social registry component, which as Mitul was mentioning, a single source of truth. Now, if a registry is done well, we call it a dynamic registry, and it is updated well on time, then this registry becomes a source of truth, and you don't need to correct the data again and again from beneficiaries. Then when it comes to program and beneficiary management system, again, if these softwares are designed with configurability in mind, interoperability in mind, then you can define several programs in the same system rather than having an implementation, a software system implementation, for each of the programs. That we find very often that when there is a new program, a new system is implemented, and that's not necessary if these modules are designed well. Then we have something called a bridge, which is again an infrastructure kind of component where it's used for disbursement of cash or in kind. But the point being that if you install this infrastructure, then several programs can use it, several departments can use something like a bridge. Then we have ID account mapper, which is called SPAR in OpenG2B terms, but it is basically a very simple module, which is mapping your ID, that means beneficiary's ID, to the financial account information. And this simple innovation, I would call it, has given great benefits in India. And I'll talk about some of the numbers here. Again, an infrastructure component. By one place, you have the beneficiary account information, and the beneficiary can choose where to receive the benefits. So these are designed thinking thoughts, and these are design improvements and architectural, I would say, innovations that those are simple and they can definitely help to reduce costs for the government as well as improve the benefit delivery efficiency. So the impact is, as I mentioned, some of the several, there are several ways in which you can look at it as to how the costs can be reduced. The dynamic registry, what I talked about, it avoids the repeated data collection. This is a very common situation where across programs or across departments, the same information, a very similar information from beneficiaries collected. And if a registry is done well, it can serve as a single source of truth, and you don't need to do this exercise, thereby reducing your costs. As I mentioned, the components are developed in an infrastructure manner, a reusable infrastructure way, again, avoiding multiple implementations of the similar software. ID seeding is a very simple thing, but it's very effective in India, where because of the Aadhaar seeding of the registry and so on, the leakages were reduced in the overall benefit delivery. In fact, in India, I think the government has saved something like $40 billion by having a good Aadhaar seeding and a DBT, or direct benefit transfer system, which is a significant percentage of the overall benefit distribution. So, and of course, automation is obvious that more you automate, it reduces the costs. Having said that, I will, I'll give you some examples of how some of these modules are being used today. In Ethiopia, we are working with the Agricultural Transformation Institutes, where we have implemented a farmer registry, again, as a reusable infrastructure, which is seeded by the national ID, which is the FIDA ID. Now, this registry becomes the single source of truth for various services, like the advisory or finance or loans and so on. Again, this is done so that the data is not, the registry is kept up. The data need not be collected again and again. Big surveys need not be done. And there's one place where all the data is available. We are also working in a state in India called Telangana. Telangana has a population of around 40 million, and we have implemented something called a family registry there, which is Aadhaar seeded. It has around 10 million families. Again, the same point that because it is done well, it's at one place, you have the information of families for giving them benefits. In Zambia, I'm giving an example of Cash for Work program. Here, pretty much all the modules of OpenG2B are being used. Here, the registry is basically a workers registry, and then Cash for Work program is in the PBMS and so on, where the cash will be given for the work. Again, the point here I'm trying to make is that once you install the PBMS or a bridge or a SPAR, you need not install the similar software again and again. You can reuse this software, and thereby increasing efficiency and reducing the cost. Also, the time of implementation for any program. You could define multiple programs in the system. So that's pretty much what I wanted to tell here is that innovation can be on different fronts. but even architectural innovation can really lead to cost savings and efficiencies. And such systems are now available. And not to forget that open source systems are helpful in the way that governments can continue to maintain these systems on their own and not relying on just one vendor. So that's it from our side. Thank you very much.
Thank you so much, Puneet. Your presentation was incredibly insightful and showing how we can take open source approaches in order to improve the delivery of essential services. I especially appreciated how in the beginning of your presentation, you discussed how I think conventionally we get excited over the most up-to-date innovations. Like right now, there's so much focus around the potential of AI, and of course, these are important. But I admire your and OpenG2P's emphasis on architectural innovation and thinking through how conventional technologies put into a certain modular sequence can potentially deliver much higher savings and overall impact in the end. So thank you very much for your important presentation. I will once again thank Mr. Alok Rajan and Mr. Puneet Joshi for their presentations, walking us through some of the reforms that are happening through the use of technology on the spending side. We will now move into the second half of our conversation, looking at how technology is being harnessed in order to improve revenue collection and tax administrations. A quick word to the audience. We will be having a moderated question and answer at the end after the 4 presentations. If you would like to ask a question during this period, then you can please submit your question into the Q&A box or to the chat. Thank you. And with that being said, we will now move into the revenue side of our conversation. And I am pleased to introduce Mr. David Nabina, who is a program manager at the Nigeria Governors Forum, or NGF. David uses a combination of research, technical tools, and political economy analysis to advise governments on how to improve their service outcomes and impacts. Previously, he was the chief economist of the Nigeria Governors Forum, where he provided development policy advice to state governments in Nigeria and coordinated the forum's collaborative projects with development partners. David, thank you again for joining us. Over to you.
Thank you, GM and colleagues who have just made an easy round for me to come in. I'll quickly go through my presentation. I'll be presenting on mobilizing revenues through digital reforms. I think the introductions by the previous colleagues make this work a little bit easy for me. First of all, these are real challenges. Although my presentation is about Nigeria, it could be related to any developing country, particularly in sub-Saharan Africa and Southeast Asia. The issues are quite the same: high public debts, low tax revenue to GDP, limited borrowing capacity, frictions in payment. And I think we all saw that during the period of COVID, where many developing countries did not have the headroom to respond to the crisis at the time. We also understand that many of these countries have high administrative burden, like has been indicated earlier, and perhaps that is as a result of limited state capacity. So this is more or less the state of play for many developing countries. For Nigeria specifically, the results are quite the same. You can see the numbers on the screen. Tax to GDP is below 10%, lower than the sub-Saharan African average. So the numbers for Nigeria: low tax revenue to GDP, low internet penetration. But I think 2 key points I'd like to make here. One is Nigeria is a federal country. So we have 36 state governments, 774 local governments, population over 230 million, so it's the largest in Africa. GDP size also one of the largest in Africa. But I suppose those challenges are quite similar. We see fragmented digital system, fragmented PFM system as well, and those have affected fiscal challenges, has impacted fiscal challenges in the country. So our work at the NGF, what have we been doing, given the state of play, given the challenges regarding revenue generation and mobilization? I think our focus has preliminary or has usually focused on technical issues. And I think the previous speaker talked about that the issues are not merely technical, right? We focus on building evidence, supporting data collection, supporting evidence-based reforms and capacity building. And we did come up with about 5 main solutions to help address revenue mobilization. One was around autonomy for revenue authorities. The second was building a harmonized system for codes, for taxes, for laws, and the likes. And we also saw that some of the risks to taxation was really around building trust in government services, trust in government, and even the taxpayers. The whole of government approach was perhaps even more pronounced as a key challenge. Digital transformation of the revenue authority was also quite pronounced as a big challenge. But across the board, we saw one main challenge, well, 3 main challenges that, was still prevalent. One was dependence on on contact intensive taxes from many tax authorities. We also saw high compliance costs, whether for individuals, businesses, for government entities, in terms of the time it takes to pay taxes, processes, in terms of even the money they spend in paying those taxes. And the last of it, I think we've seen more recently, is the rising or the reducing rate of revenue growth, right? Are state authorities catching up with their revenues, or merely the digitalization process has gone up to the most it can get? And do we need to change the approach of how we collect taxes? And I think that has been one of the major drivers for our recent work around the use of DPIs in digitalization. So this graph really illustrates what the challenge of fragmentation has looked like. We have 36 states in Nigeria, but we've seen that the largest portion of revenues collected has been accounted by less than half of the states. And if you look at the right chart, you would also see that the growth is also concentrated in only a few states. So while we see growth in revenues largely, that has been accounted for by only a few states. So that's not widespread and integrated across board. So that's one big challenge around revenue currently. The second, and one of the reasons why this has happened, is perhaps because of the focus of the reforms in tax administration. It has focused mainly on quick wins, on payments, on receipting, rather than on processing, rather than on addressing issues around standard operating procedures or rule-based processing. And we also see a lot of manual interventions, which of course come with errors and delays in tax administration. On the larger economy, we've also seen some correlation between the economy of the state and the digital readiness of the tax authority and its capacity to tax the system. And that has been dependent on 3 main factors. One, the digital infrastructure of the state, looking at issues around internet connectivity, electricity, and even preparedness. How prepared is the economy itself? How much capacity and know-how do they have? And the digital ecosystem as a whole. What is the role of the private sector? What is the size of the economy? What is the role and the size of e-commerce, e-trade, and the size of the digital economy? That has also impacted on the revenue authority as a whole to raise revenues. So that has meant that although you can transform the authority, you also need a way of transforming not just the authority, but the economy itself and the government. And that was the justification for this work that we started at the NGF. So we have come up with this project to address 3 things with 3 main objectives. One is really to understand the maturity level of governments in Nigeria to collect taxes. Second would be to see how we can develop and create roadmaps for each, from low to medium to high. How can we identify where states are? Because we understand that states are different digital maturity levels. So the solutions and the reforms they need are unique and should be stylized in such manner. The third objective was for us to develop roadmaps to see how we can address those big challenges. And this slide really talks about what Mutil talked about, the principles of PFM, looking at the single source of truth for taxation. So when we look at taxation, we're looking at the tax identification number. How do we ensure that there's one single source of truth? for tax IDs such that multiple tax IDs are not identified with individuals or businesses? How do we ensure that data is shareable across multiple MDAs and authorities in government? How do we ensure that data can be tracked, can be observed? And so these same principles were also applied in our work at the NGF. And the objective, like I mentioned earlier, was to group states into 3 buckets where we can provide stylized roadmap support to them. The work entailed a number of stages. One was to really understand the PFM environment. We also had to have interviews with a number of stakeholders in the community. We also developed a readiness tool, which I will talk about in a later slide. That slide was administered to 36 state governments. They responded, they provided feedback, and with that feedback, we were able to group them into the 3 maturity levels I talked about and provide a roadmap that would help them address the issues that we've identified. So what did the tool look like? We have 9 main indicators, 9 looking at the taxpayer management process from registration, compliance, estimation, payment, acknowledgement, even communication with the taxpayer. So we looked at those 6 broad areas, but we also looked at 3 areas that are cross-cutting: capacity of the tax authority, data security, data management. And this tool was really developed with our partners at MSC, and they were administered across all 36 states, and we were able to collect data that we could present in such manner. So this is an illustration of what that data can look like. And I think one important point to note is that this tool can be adapted for any jurisdiction, such that you can, for each jurisdiction, for each state government, whether federal or state, or for each municipality, you can tell exactly how each authority is performing and how each state is performing, and some of the responses that you can apply. So we apply this tool, not just looking at the tax authority, but we streamline this into 3 main broad classes of taxation: for individuals, for businesses, and government entities. So it provides a clear snapshot of how much taxes are collected, but even the capacity of the revenue authority to collect taxes from these 3 main groups. And I talked about earlier one of the importance of this. Because we're able to identify the maturity level of each revenue authority, we're also able to provide recommendations that are stylized based on the indicators and based on the capacity of the revenue authority. This slide illustrates something I think is quite unique from this work that we've done. It also tells us a lot about the indicators, how they correlate with one another, and you can tell the importance of one indicator over the other and how one influences the other. For example, when you look at user onboarding, so the process of registering for tax collection, that's highly correlated with data security. Because there's one user account, data security is a lot higher, data management is a lot higher, and we also see a higher correlation with acknowledgement. So you can have a system where the tax authority has a single customer account for a taxpayer, and in terms of communication, they can easily communicate using that secure platform. So I think this is an example of one of the new applications of how tax administrations are improving. I'll close with the last slide, which talks about, it addresses the challenge. So why hasn't this worked in the past? Why hasn't digitalization worked in the past? And I think a lot of that has been as a result of politics in the system. And we're talking about an area that isn't tangible. It's not like a physical infrastructure that you can give credit to a government or to an executive. And I think that has been one of the main risks of digitalization in the past. And the difference between digitalization, as we know it traditionally, and the DPI approach is that it gives us a new way of advocacy and engaging with governments. So I've put in here 4 instruments of advocacy that we can use. One of them is to really look at success stories and benchmarks of what has worked and what hasn't worked. Many of them are domestic, and using this tool really gives you those clear insights of who's doing what they are doing, and some of the impact points. The second, I think, is scalability. With the DPI approach, rather than building heavy, expensive systems, we can always start small, looking at those specific indicators, those pinpoints, and addressing those challenges as they come in. The third point, I think, is quite relatable to many jurisdictions, political capital. And I talked about this earlier. Many government officials want to build or invest in systems, in services that provide tangible results. And I think implementing sector DPIs is one way of looking at this. Rather than talking about digitalization as a whole, you can always relate this to the priority of the government, whether it's in agriculture, in healthcare, in education. There are specific applications of the DPI tool or the DPI process into some of these sectors that might be of interest to government. The last collaboration, I think the DPI approach creates an opportunity for different stakeholders to invest, to play a role in providing public-facing services, be it the development community, be it one of what the colleagues are doing in the room, eGov, MASOB, or even the private sector as well. They have investments that they can make, and providing some of the platforms that are shareable, that provide, those registries are really segues or entry points for many private sector entities to come into, the development space and play an active role. So I'll close here and hand over to GM. Thanks again for the time, and I apologize for, the break in the presentation.
Thank you so much, David. No problem whatsoever. Your presentation was extremely insightful. I think, I speak for everyone at MSC that being able to work on this project around digital readiness for tax administrations in Nigeria was deeply enriching. I think something that is extremely important from your presentation that you mentioned earlier was the importance of meeting tax administrations, meeting states where they are, and then accordingly developing solutions tailored to their current circumstances, given that, as you have shown in Nigeria, there is a lot of variation in terms of the readiness or capabilities of tax administrations at a state level to undertake these necessary digital reforms. So thank you so much for that presentation. And I am now excited to move over to our next two and final speakers who will talk through work that they've been doing specifically in the realm of property tax collection. We will now hear from two speakers from the Local Government Revenue Initiative. Our first speaker is Mr. Moyo Arewa. He is the Director of Programs at the Local Government Revenue Initiative, or LOGRI. In this capacity, he oversees all aspects of LOGRI's research and advisory operations and provides strategic support to LOGRI's Executive Director and Chair. He is also joined by Mr. Evan Trowbridge, who is a technical lead at LOGRI. He advances LOGRI's work through the collection, analysis, and management of data. Before joining the LOGRI team in Sierra Leone, he was a data manager at a local research organization. Moyo and Evan, thank you so much for joining us. Over to you.
Thanks for the introduction, Guillaume, and thanks for the invitation to speak here today. My appreciation also goes to Vikram, to Alok, Puneet, and David as well for your enlightening presentations. I'm joined today by my colleague Evan. I'll just pass it over to him for a brief introduction, and then I'll begin our presentation.
Thanks, everybody. It's great to be with you. I'm Evan.
Right. So as Guillaume has mentioned, I'm a program director here at the Local Government Revenue Initiative. We are a research and advisory program based at the University of Toronto at the Monk School of Global Affairs and Public Policy. We're funded by the French Treasury, the Gates Foundation, and the Norwegian Development Agency. And our work centers around developing research and knowledge and participating in reform projects on property taxation, specifically in Africa and in South Asia. Today, we're going to run through some of our experiences with the digital angle of reform, of property tax reform. Of course, we do a lot more work beyond this, but we're going to share some experiences about what we've learned from doing digital reforms in the property tax context in Africa specifically. But before we go into that, I will try not to spend too much time here because David has covered some of this, and earlier Alok also alluded to some of these challenges. But when we speak about digital solutions in the property tax context, we speak about the promise of these systems, right? The promise that that digital tools can be used to improve create and improve GIS-based property maps, which is essential to the property tax lifecycle. That digital solutions can improve the valuation process by making it possible to run automated valuation models that are simple and transparent. That they can improve all manner of functions, data management functions, from file management, to data warehousing. That digital solutions can also go as far as even improving the robustness of the system, limiting politicization, corruption, because of how much more transparent the systems can be when they're digitized. And that all of this combines to improve tax compliance, improve the capacity for governments, and especially local governments, to engender voluntary and quasi-voluntary compliance amongst taxpayers, while also improving access to information by, for example, putting tax information online, by making it easier for people to see what they owe, when they have to pay, by also introducing payment systems, which some of you have spoken about earlier before me. But despite all of this potential, we know, as David has mentioned, that in a lot of contexts, especially in Africa, digital solutions often fall short of their expectations. This isn't always because of non-adoption, although that's an issue as well, but also because sometimes systems just fail to deliver fully. This failure takes three key forms. In the first instance, systems are often poorly designed, owing to bugs, lack of key functions, just technical challenges, because we're operating in somewhat difficult contexts. Some systems are also, if they work, overly complex or poorly aligned to the local context. Either they're too difficult to use, they're not flexible enough. We've seen systems that are in English in contexts where no one speaks English. Systems that are not fit to the local workflows, local systems that are just complex to manage, or that are too costly over time. And in the third instance, we've seen systems that are unsustainable in the long run because there's a lack of support, a lack of training, and governments get into a vendor lock-in situation. All of this is exacerbated, as David sort of alluded to, by limited public knowledge, low digital literacy, making outcomes really bad, or at least suboptimal relative to expectations. But there's a way forward. There's strategies that can be implemented across the procurement life cycle that can improve the chances that digital solutions meet their mark. Right? Systems that are developed have to be fit for purpose. That means that they have to be affordable in contexts where that might be a challenge. They have to be tailored to lower infrastructure and lower capacity environments. Systems have to be procured and developed in ways that enable government partners to minimize the chances of lock-in and to plan for sustainability beyond when the developer is in the country or in the room. And systems have to be developed in a way that is iterative and embeds learning about how to build successful digitization, and integrating that learning iteratively into the development process. And in addition to these broad strategies, there are also some key design principles that we're going to expand on when Evan takes over in a second, that underpin successful digital reforms based on our experiences. And these design principles are there to ensure that the systems that we are working with are robust, that they're usable, that they're low cost and sustainable. Low cost doesn't mean that they're not that's low effort, but that they're just stripping functions to the bare functionalities of the system. And that means that systems have to be simple, with simple user experience and workflows. They have to be lightweight, especially again in low bandwidth and low connectivity environments. They have to be configurable and modular, which means you can take certain modules. You can take a payments module, you can take an identification module. You don't have to take a full stack if you don't need a full stack. They have to be interoperable as well, enabling API connections and simple data structures to enable data sharing. And in the final two principles, they have to be able to enable cloud and local hosting, whenever that's ready. And finally, in an ideal context, systems that we work with are often better when they're open platform or open source, reducing the possibility for lock-in, but also enabling transparency and accountability in the development process. Over to you, Evan.
Thanks, Moyo. So I'm going to tell a little bit of a story about what happened in Freetown, Sierra Leone, building on the strategies and the principles that Moyo laid out, putting those into practice. So the story starts in 2018. Freetown had not updated its tax database in more than 2 decades. That's despite a legal mandate that the city had to update its tax database every 5 years. And part of the reason for that was that evaluations were happening slowly. They were prone to collusion between the valuers going out and doing the face-to-face valuations and the taxpayers. And a new mayor was elected to Freetown, and she wanted to reform the system. She wanted to create a digital platform that citizens would perceive as being fair and trustworthy, and would also help to equip her with the revenue that she needed for her platform of service delivery. So she and her staff asked our organization to draw upon the research we'd been doing to help to design a system that involved the digitization of mapping, valuation, billing, and payments. So we worked with a private developer to build a simple open platform prototype for initial deployment in Freetown. This is known as the 1.0 version, and that was adopted in 2020. Then systematically, that system achieved minimum viability, but it had limitations of amid systematically documenting those. Some of these limitations involved workflows that required external support from myself and my colleagues, missing functionality that was identified during the deployment, and then problems with scalability and interoperability. So that then led to us working with the same developer to build on these, to iteratively find these room for improvement and develop a version 2.0, which is now in progress of being implemented in Freetown and has already been implemented in 3 other cities. Next slide, please. So quickly, we don't have time to go through all of these, but in addition to the principles and the strategies that Moyo laid out, we identified these as kind of the components of the property tax cycle that needed to be incorporated into the platform. And we will kind of highlight a little bit of how these look like in practice. So if you see on the next slide, we see something that was quite important was an equitable, complete record of all the properties in the city, a database that was complete where everybody was treated the same. And that was done through using aerial imagery. Here you can see the mayor actually flying a drone over a portion of the city. On the right, you see a screenshot from the tax database system where you can see every property roofline has been mapped out, identified. Each of these have a property record if they are taxable. If they're not taxable, it's documented why they're not taxable. In the next screen, we can see what that actually looks like for an individual property. This is just part of the property record, not the entire record, but you see here information about the property, its location. You see the roof area, the square footage of the building. That goes into a calculation that estimates the value of the property combined with other features such as where the property is located, what it's made out of, about more than 30 features that were observed in person by a data collector. And then a photo was also taken of that property. All that feeds into the database. The database provides you with an estimated value of the property. It also, after the city council and the mayor determine what the tax rates are, can provide a tax for the property. And this bill is one of tens of thousands of bills that are generated on an annual basis. These bills then must be distributed to the taxpayers. So on the next slide, you see how the system also has a mobile app, and dozens of delivery agents can be recruited each year. They don't have to be highly trained or special people or have special knowledge, because they basically just have to know how to use a mobile phone and how to navigate using an app or using a map. And so you see here the app that they're using a screenshot, and this young woman has several hundred of these papers you just saw in the previous slide. She's going to go around and distribute maybe about 50 or so a day using this mobile app. Going to the next slide, what were the results in Freetown? So at the beginning of this reform, they had about 57,000 properties in their tax database. You can question yourself, what are the actual results at the end of the reform? Will reveal that it was 170,000. So this was a threefold increase in the number of properties in their database. Caveat, after we did the field data verification, we found that of those buildings, only 108,000 were taxable, but this was still a huge impact on the city because it led to a fivefold increase in revenue potential and a threefold increase in revenue collected. And the exciting thing for us and for people who cared about fairness in the system was that a lot of this was coming from high value properties, a lot of this extra revenue. And that meant that the previous system was not actually very fair to properties that didn't have the same value were being treated the same. And now we're seeing properties with higher value being taxed at a more fair rate. Moving on to the next slide, if you were the mayor, if you were a manager, you want to be able to keep track of this in real time. So this system also has dashboards and quite a few other components that we frankly don't have time to go into. But here you can see what maybe the mayor would see when she wants to review some of the data on her system. What were the principles of success that went into this? So alongside appropriate design of the IT systems itself, a successful IT reform requires careful attention to the change management and building an enabling environment for the reform. So the IT system is just a tool. It's not a solution on its own. Earlier, we thought about architecture. I think this kind of harmonizes with that point because the work doesn't stop simply with implementing the software, right? So there's all these other key principles that must go hand in hand with that implementation. That involves process reengineering. It involves staff capacity development. It involves staff buy-in. It involves managing resistance to transparency, and it involves budgeting and capacity planning and thinking, anticipating budgetary needs along the way. These systems pay for themselves, on a cost-benefit analysis. The revenue collected pays for the system, but you still need to be thinking about annual, semi-annual payments that go into maintaining the system and the software. This is the conclusion of the slide, so thank you for your attention.
Thank you so much, Evan and Moyo, especially for covering, I think, a lot of ground in a relatively short period of time. I think, especially when it comes to property taxes, I feel like in a general sense, the solutions are very well known, such as leveraging satellite technology, GIS technology in order to identify properties. But what it actually means to do that in practice is often very hazy. And it was fantastic to see how exactly Logri has been approaching this in Freetown, but of course in other parts of Africa. So thank you very much for that presentation. We will now open for a Q&A. So I will invite our speakers to turn on their cameras if they can, and also to participate in the Q&A. We have a couple of excellent questions that have been coming in to the chat. But of course, if you have another question, then by all means, you're welcome to submit it to the Q&A box or the chat box. We'll try to cover them to the greatest extent that we can. Okay, great. I can see all of our speakers are here joined once more. I think, David, if you're able to turn on your camera or turn on your mic, then that would be great for you to participate in the Q&A. Okay, so just to start us off on the questions, I think one thing that's been really fascinating that was a thread that we heard across all the presentations is this point about adopting or applying shared principles, approaches, and models in order to address challenges that we see on very different processes, both on the expenditure side and on the revenue side. For example, we've heard mentions about the single source of truth and how that's important, both when you're trying to deliver a service, but then also in order to identify your taxpayers. And it's been really fascinating to see how organizations like OpenG2P and Logri are trying to develop these open source modular approaches that can be adapted and replicated to different environments in spite of a lot of variations in particular systems. And of course, the great advantage to that is flexibility, is adaptability, is cost effectiveness. But I think there's always that question of how exactly do you tailor this to the right environment? And so there were a couple of questions around, for David in Nigeria, how exactly are you actually meeting the requirements of unique tax administrations at a state level? Likewise, for Puneet, there was a question about how are you sort of navigating this given the great diversity from state to state in terms of PFN or social or service delivery systems. And so my question for, I think all the panelists will likely have a perspective on this is how are you balancing that desire in order to strike the potential for adaptation while also meeting the unique needs that a particular government might require? Open the floor to whoever would like to start.
All right. I think this question came later on. How do you think that G2P DPI model proposed in my presentation will be used for India, where there are different tax collections and spendings and so on? And do you think of making the DPI so dynamic that takes care of the variations? Well, when we say G2P, our focus has been on G2P only, not P2G, right? So we are looking at government to person service delivery. And so what happens is, if you make a software very generic, then again, it loses its focus. And we are focused only on G2P. So and there are variations, but most of the workflows are captured, and they will be like 15% or 10% of customization that we allow. So we hope that with a more focused approach of a G2P service benefit delivery, we're able to reach out to larger countries, have very rapid deployment with less customization. This is one approach. There could be other approach where you just have different components to tie up and make any application. But we are looking at specific application of G2P only, benefit transfer. So that's a focused approach. And yes, so far we have encountered less of customization, maybe 10%, 15%, max 20% sometimes. So yeah, we hope to address G2P across different states in India as well with the software we have. Gilly, there was a couple of questions I saw earlier in the chat. Do we want to address them?
Yes, we can absolutely go on to those. Just wanted to pause and see if others would like to comment on this question about adaptation and meeting, tailoring to particular context.
See, I would like to add, I think it's a very relevant questions. So these problems might look similar from the top, but they are not same because country contexts are different, rules are different, regulations are different, the way countries are structured are different. So from a solution perspective, one solution will not fully meet any requirement. So I'll go back to what I started off with. So we're talking about some principles. For example, single source of data is a principle. Now, how do we achieve that single source of data, single source of truth would depend on the context of the country, context of the program, right? So I think there wouldn't be a scenario where a solution that has worked in a particular geography would be easily implementable in another country. And that is something we are seeing firsthand in the work that we are driving with David. The principles are similar, but the way those principles translate on ground in Nigeria are very different from the way they are translating in India. So this is just an add-on from me.
I can jump in quickly. I think, specifically in property taxes, in our system, like Moyo emphasized, like our system actually tried to emphasize simplicity. So in that sense, it's relatively easier to meet local needs. One of the things that we tried to emphasize and that Freetown agreed with was that the property tax system should be progressive in the sense that more valuable property should incur a higher tax. Not every government that we encounter wants a system that is progressive in the same sense as Freetown, where Freetown wanted more than 30 variables that went into the equation that estimated property values. Sometimes a government says, no, we want to measure the area, or we want to measure the area and then put it into 5 categories. So as we developed the software and as we kind of built this 2.0 version, that was always in the forefront of our minds, was not just how will Freetown use this, but how would a city with different that wants to implement a different valuation model do that. And one thing we didn't get to talk about is a lot of these cities want to also incorporate business licensing into these software systems, which occurs in a separate module of the system, but a lot of times like they want to value businesses based on the properties those are in. Some cities want that, some cities don't. But I think actually so we made sure that all the cities could decide themselves what to incorporate and what not to, and what they were ready for. Some cities say they want this level of complexity, but when you start asking them to develop the models, it becomes quite apparent that might be a few years in the future after they've adopted the system, and maybe they're not ready for it right away. But there's another part of this, which is that a lot of this is like payments is a lot of times where there's collecting the revenue, how that happens. Is it going to happen through a bank? Is that bank going to have a branch inside the city council building? Are you going to incorporate mobile money? Are you going to accept cash? Where, like, who manages that bank account? Like, who does the bank account belong to? Like, all of this stuff, like, you need to be, that was where we had to also spend a lot of time to be flexible to the local context, because there's going to be every council, every city is going to have different approaches to how they want to manage the revenue collection. And that was an area that required a lot of adaptability. And I think the last thing I wanted to touch on is just who has like when you're doing the data collection, who are you collecting, under what authority are you collecting that data? Is this coming from the central government? Is this coming from the municipal government? Who owns the data ultimately? Is it the central government that's letting the municipal government have this data? So there's also a lot of, sometimes we talk about trying to decide what is operational and what is technical, and making sure that those two are aligned. And some of these are kind of keeping the system technically simple to be able to deal with the operational complexities and the political complexities. So hopefully there's some value in that.
Great. Thank you so much, Evan, and the others for commenting. We had one other question a couple of questions directed to Alok, trying to understand how the Gates Foundation is approaching some of these themes. So Alok, you had discussed earlier during your remarks about how just-in-time is, I think, revolutionizing how we deliver payments, especially at a central government level within India. And there's a lot of potential now to be thinking about how states could be implementing just-in-time systems. And so how is the Gates Foundation supporting this process of thinking about how just-in-time could perhaps be implemented at a state level? And then at the same time, from a somewhat different lens, there was a question around how there's growing thinking about the intersection between PFM and climate change. And there was a question around how exactly should we be thinking about the way in which technology is being used to work at the intersection of public financial management and climate change. Have you seen any particular pilots or ideas in this direction that would be worth discussing?
Thanks, Guillermo, and thanks, Karan, for the questions. Since we're at time, I'm going to keep my answers really short, but happy to have a follow-up chat on this. On the first question, completely agree. I think just-in-time funding is very useful. But as I had mentioned when I was speaking, I don't think it's a particularly novel idea in government. I think there is some level of experimentation, iteration that has happened over the years. The latest one being SNA Sparsh, which states are being encouraged to use. So I think very important, even in the work that we do, for example, even with MicroSave Consulting, just-in-time funding is very much a part of that thinking. But I don't think that's a standalone piece. Usually, paired up with smart payments in many of the state level pilots we have, largely because I think even the pitch to government is much easier for just-in-time funding than for payments reform, because just-in-time funding essentially makes the government's life easier. There is more visibility, there's ability to plan better. Whereas payments often make it makes the life of people outside the government easier. So that is a second order priority very often. So I think given that philanthropic capital is scarce, a lot of our focus has gone towards the money flowing out of government part rather than money flowing within government. Although this is a very pertinent problem that over time needs to get solved. On climate finance, similarly, I think a very important area, but particularly within the foundation, we don't have specific focus in this area, largely because a lot of our climate work as a whole across the foundation is concentrated in Gates Ventures and largely on the mitigation side. So we haven't actively worked in this space in India. Oh.
Thank you so much, Alok. We are just about at time, so I'll just take one last question and then we can close the webinar. So, Puneet, a couple of questions that were sent in the direction for OpenG2P, but I think this might be relatable to others like Loggery in thinking about maintaining systems, maintaining registries. But so how exactly does OpenG2P go about maintaining a social registry? I think oftentimes the challenge that we see with governments is that they might introduce a new system and have everything up to date, but then as years go by, this quickly sort of falls out of date because there are follow-up efforts. So how is OpenG2P navigating this constraint? And if others have perspective on this, then please chime in.
Yeah, that's a great question. And I think from the technical standpoint, what we have done is uh, giving sufficient hooks for update of registry, making the registry update a very easy process, and giving various ways of updates to the registry. So that's one from the technical point of view. So there are APIs, there are self-service portals, all flow in the data into the registry, or even pulling data from other sources. So technically, we have given all those hooks to make it very, very easy to update. But other than that, there are two important things we are offering. One is the change management process. So any change has to be approved, right? Whether it comes from an individual beneficiary or from other systems. So having a solid change management process is important, an approval process. And the third is audit, right? Any changes and whoever changed what has to be properly audited. So with these features from a technical point of view, we feel that we have made it very easy for keeping the registry updated. And of course, it's like once the trust is there in the system, the trust is there in the government departments that yes, the data here is really good. It's like feedback, and people want to maintain the data set. So this is what my viewpoint would be on this.
Great. Thank you so much, Puneet. Would anyone else like to comment on this question before we close?
I can just quickly say that this is a definite challenge for property taxes. Absolutely, using the aerial images and keeping these aerial images up to date allows you to do that. There's experiments in using, even we're in the machine learning AI age. Using change detection algorithms to look for buildings that have polygons that don't exist in your existing polygon database. So there's opportunities in that regard. But also like on the procedural level, we're making good progress with the central government in Sierra Leone in moving the building permits permissions from the central government level to the local government level. That way, when somebody applies for a building permit and gets that permit, you make sure that that goes into the tax database and that permitting system is harmonized with the tax database. That was a big thing that we think would help keep these systems actualized. Over.
Fantastic. Thank you so much, Evan. I think with that, we can close our webinar. Thank you so much to our speakers and to our audience members who stuck with us. And even though we ran a couple of minutes over, just want to once more give thanks to Mitul, Alok, Moyo, Evan, Puneet, and David for taking the time out to share the fascinating work that you've all been undertaking in this realm of how do we use technology to improve public financial management, both from the lens of delivering services better and also raising funds to deliver those services. This has been fantastic and I think left some thought-provoking questions lingering in the audience's minds. Thank you all and have a wonderful rest of your week.